Good afternoon and good evening, everybody. This is Dennis Wilson with the Aftermarket Monday for what is today, the 21st of May, 2018. May is quickly slipping away. That'll give us 5 months in the hopper for this great year. I want to remind everybody that all the materials we do present are for trading purposes only. Traders should always pay per trade any new method prior to the risk of their own personal capital. Past performance does not guarantee future performance. What is Aftermarket Monday about? One is we want to provide some timely, actionable intel at the beginning of each week, what we're looking at. And while, yes, I do not give the triggers out like we do for the premium members, I at least put out there and say, okay, here's what we are looking at. We do a real quick market review. What am I looking at? More downside, more volatility, or more upside, more volatility. It's like the market is kind of stuck, and with the exception of the Russell, the other two indexes that I track are not getting traction right now. We look at stocks, ETF setups, and just always a reminder, it's an issue when you're a trend trader and when you are a technical analyst. It is an issue of being patient. Here's where we're sitting as of about the end of the day, about 12:15. Took a snapshot. All of the markets are up in a green zone, as you can see. NASDAQ, Russell up the greatest. S&P and Dow are basically bringing up the rear. All the indexes are above where they closed, above their high from last year, so that's a good thing. So the question I have going into today, and it should be May 20th and beyond, excuse me, is anyone really winning? And I think the answer to that is yes, but it's in spurts. We basically are able to, we're still trading between the floor and the ceilings, and it's kind of like we're range bound. There's no definitive, no clarity on specific uptrends, at least on the indexes. And yes, there's a bullish bias or an upside bias, but not a lot of just real big jumping on it and getting things moving. Wide range moves with little traction. Look for horizontal support resistance. We've talked about that. We did send out a bonus trade. If you were on the call on Friday, we did a trade in JNUG, which is the gold miners, one of the gold miners leveraged bullish ETFs. We got in at 1432. It's a little bit above that now. If gold continues to get the bid that it's getting, we're looking for JNUG to go up somewhere between 10 to 15+%. And we'll start taking a little bit of the profits on that. Now, this was a bonus trade, and it was provided to both premium members and non-premium members of the active trend trading. The other entities we are looking at are 7 ETFs, Netflix, Tesla, NVDA, YY, BABA, and Grub. So let's see here. One of the things we always want to remember is the 4 trading outcomes that can happen when we're trading. 1, we can win a little, we can lose a little. 2, win big, lose big. The objective of any good trading system is to eliminate the lose big portion. Because if we can eliminate the lose big aspect of it, that's where our biggest risk resides. And how do we do that? Basically, we try to time our entries, get them as close to reversal zones as possible if it's in an uptrend. Matter of fact, this coming Wednesday night, I'm going to do a session on the importance of pullbacks for trend traders. Those, that's the edge. That is the edge to trend trading, and especially if you're trading the first pullback. That is probably the most important of all the rest of the pullbacks. It's that first pullback into support, or on the flip side of that, if you're trading it to the downside, it's that pullback into resistance. That first one after you've had a trend change, that where you can get the biggest bang for your buck. So that's what we're going to be talking about. Gold seasonality. Where are we at in gold? Well, I just wanted to highlight this area for everybody. Get my drawing tools up here. We are basically rapidly approaching this June-July timeframe. Why do I share this so readily with anybody? This information is available, almost anywhere. This is gold seasonality, what it's done over the last 40 years and 15 years. And as you can see, we get a little bit of a drawdown into the June-July timeframe. And then towards the end of July, oftentimes gold will give us a bid, and it'll launch itself on typically its biggest move of the year from the end of July into midsection of September and or October, and then it does another minor move towards the end of November into the end of the year. Somebody sent me an email about the seasonality. I think it was Eric or somebody sent me an email that talked about this part of the year here is probably due to the Indian wedding season, and this one is due to the holiday Christmas season, where people like to buy little gold trinkets for their loved ones. This is one of the reasons why we take a look at JNUG and JDUST. And JNUG being the leveraged ETF for bullish gold miner movement, and JDUST being the flip side of that. And as we can see, this is just, I took a snapshot midway through May on a daily basis, and you get these moves that are just really amazing. 6 days, 42%. Not necessarily saying you're going to grab all of that, but on the flip side of that is this move in JDUST, moving from down here after a really nice bullish divergence on the TSI, moves up 69% in 15 days. Well, what does it correspond to? It corresponds to this same down move here. And I venture to say that if our traders would just kind of pay attention to JNUG and JDUST and a couple of our other index, other ETFs, you can have a splendid year and without having to be trading a whole lot. But as I said, this 2 points, this point connects with this point connects with this point, and that turned out to be a 69% gain. It was me. Thank you, Eric. This is another, even though the market was up today, I still want to continue to throw this up to emphasize, where are we at in the overall scheme of the macro picture? If this is the macro picture of a stock market that has had a really big run, bullish market over several years, granted hit a new high, euphoria, everything was wonderful and great, kind of the way we felt last year. Now we've kind of pulled back a little bit and we're popping back up. You have to take a look at these in the longer term charts. Have we become complacent? There's not a lot of fear out there in the market, even though the volatility has been bouncing up around. There's still not a lot of fear. There's a lot of news-driven volatility, but that's different than all out fear concerning the stock market itself. Where are we at in the market cycle? Well, even with the Fed messing with it, where are we at with the market cycle? Are we up here closer to the peak than we are to the valley? Because we want to be buyers at the valley. We want to be really, really careful if we are in this zone up here in the towards the peak. But this gives a really good explanation. I think I've sent this out to several people who've asked for this chart. It's an excellent chart just to keep in mind, and check your emotions against this particular chart, because if the market starts falling, you start going through anxiety, denial, panic, and when it finally capitulates, you're just really ticked off because, well, hopefully as an active trend trader, you will not take this ride all the way from here to here unless you're on the proper side of the trend. So hopefully we're going to be able to avoid a lot of these emotions. But if you find yourself having some of them, take a look just to see, where are we at with regard to the market. Now we have to ask ourselves, here's the S&P. This is on a weekly basis. Where are we in comparison? Okay, this was a nice move up since 2016. We can go all the way back to 2007, 2008. Had a really nice move up, acceleration into, the first part of 2018, and then we're kind of backing off. Got a little bit. And I'm not saying that this is the absolute, this is going to be the top that's going to lead to a new bear market. I'm not saying that at all. I'm just saying be aware of what may be transpiring out there. So we've tried three different strategies, we have 3 strategies. We follow 4 rules for entry, 6 rules for exit. Strategy 1, and our target is to jump somewhere between $500 to $1,000 per week. And we're currently at about $389 to about $349 per week. Strategy 3, it's a foundational position. It's in Spiders, Tesla, and Baba. We've got 34 more weeks to work on that particular trade entity. And so, and believe it or not, we have not been getting a lot of days like this over here in Hawaii. And that's partly due to the fog. So let's take a real quick look at a couple of stocks, and then we will. Okay, this is IWM, and this is a reflection of what I was talking about. Is one, once IWM got on track with this last move up, this is a very strong move. A couple of day pullback. There's a daily chart on the left, weekly chart on the right, daily chart on the right. A couple of days pullback back into the 8-day moving average breakout. And now this 160.65 becomes your new level of down anyway from 160 to 160.65. That becomes your new level of support. What do we anticipate? We would anticipate pullbacks that would get down to that level and then a retest and a kick higher. That's if the strong uptrend continues. Now, what makes this different than QQQ? As you can see, well, QQQ, one might say that QQQ broke out earlier down here, but it stalled and failed. It is currently, so the NASDAQ is currently in an upward trending channel. We're bumping our head up here towards the top of the Keltner channel and the other upward trending channel. So which way is it going to go? I mean, right now, I haven't got a clue. TSI has turned over on a daily basis. TSI has turned up on a weekly basis. So we get a conflict of they are not in sync on TSI. SPY, SPY, there we go. Similar type situation with SPY. Not really a breakout today. We gapped up. We came back down and tested, and then we came back to approximately where we started the day. So as far as, we think that this is a big bullish day because we had a big gap up but in reality, we opened at 273.01. We closed at 273.37. Not, definitely was not putting itself in gear to go storming up here through the 275, 280 level yet. May still happen. As you can see, TSI below the 45 line. And I hope that, speaking of TSI, I hope that you were able to get the this new configuration on TSI. I hope you like working with it, because what you can do is you can set in there and set in what you consider the overbought, oversold conditions are. And also it's got this really, arrow for when the TSI crosses over if it is above or below if both lines are above or below the overbought, oversold condition. So I thought that was a good addition. And again, you can adjust you can adjust it. I've got mine set at 45, plus 45, negative 45 for my overbought, oversold condition. So I hope that you all received that link. So, okay, hey Mark, just send me a an email on that, and I'll make sure that you get hooked up with it. SPY. So let's take a look at what else we want to look at. Let's look at JNUG. And this, I'm going to spend the most of the rest of my time today just talking about JNUG and a couple of other possibilities. As we can see, the gold miners in kind of a slightly uptrend, and at the bottom of the uptrend channel, where we'd anticipate a bounce, and that's one of the reasons why we bought it on Friday. Again, also gold was looking really good to buy on Friday. What did gold look like? Well, gold, let me pop down here. Let's take a look at first let's finish this thought. TSI ticking up, not all the way at the bottom, so, we'll be suspect of it a little bit. But if we get a run all the way back up to the top of the channel, that would be great. I mean, from here up to the top of the channel is about a 12%, but it would be angled more about like that. So about a 15% run is what we would be anticipating. Okay, so roger that, Charlie. If you could, please send me an email to remind me, okay? So I like the configuration. If we continue to move, to move up, blow this up a little bit. As you can see, it's been operating in this downward channel, but now it's operating in a slightly upward channel. But in reality, what do we want to look at on the gold miners? In reality, we're going to take a look at the non-leveraged ETF on that. That's JDX. Now, JDX, as you can see, is moving more in a horizontal type pattern. So in reality, I like that. Well, that tells us that that we're basically just building a nice little base here, horizontal, and if it breaks out the top, the JDX is probably going up here to back up here to 30 or more. Same thing over here on a daily chart, moving up very nicely. So, weekly over here, and this has been going on for quite some time, going back all the way to the beginning of March 2017. So pushing up, we could definitely hit 23 very easily if we break out above the 2330 level, 2331. That basically would be an excellent breakout to get us back moving in the right direction. But that also this particular presentation shows how, yes, JNUG, which emulates this, but it's a 3-time leverage, was moving slightly down in its channel. That's due to the contango and the backwardation in the cost of those. So as we move towards the time of year when gold tends to get a bid, if one doesn't want to trade JNUG, you can look at trading gold, GLD, just a straight ETF for regular gold. And what could we anticipate from this? Well, on a weekly chart, we see that gold has pulled back down into its uptrending line, so we know gold is in an uptrend. Now, is it going to hold here and now move up? And if it does hold here, what's its projected move up? There's a couple of ways to determine that. I'm just going to throw up one way, which is the Fibonacci extension, where you go from this low to this high, which is the same as that high, back down to, assuming this is a swing low, and if it maintains its symmetry of completing this move, so from here up 100% would take us up to about 133.82, about 133.82, and this is on a weekly chart. And so 133.82, and how does that compare to where gold has been before? Well, it just turns out that 132 is right about this past peak here. So how would I look to trade that? Well, if I know I'm going into a, certainly not like that. If I know I'm going into a potential buying time, I'd zip over here to the, there we go. I'd zip over here to my trade account, and I would look for gold, and I would look to trade a option in gold. Now, which one would I want to trade? That's always a question. And I think that, I know that the move tends to end somewhere between the middle of September to the middle of October. And so what do I have available right now that would be around that time frame? Well, I have the September. I have September options, and I have December options. So which one would I want to trade? I think I would want to go with I would probably go with the September, and at the money, in other words, 122 or slightly in the money, because what could I get? The September 122. I could pick up for right now about $3.75. I'm not saying that this is the exact exact point that I would want to get into, but that would be okay. So how much would I have at risk? Well, I could go all the way and have 10 contracts, and I would be at risk $750, or I could go half of that, maybe 50, and then just let it ride. I would go with 50, correction, not 50, but 5 contracts, and then just let it ride all the way until we get our, I get return 100% and or price action gets up there and hits the past highs. How much would the same 122 strike price cost me in December? Go down here. You see, okay, about $5.30, $5.25, and so by going with the September, I would actually be saving almost a couple of bucks. And so, Eric, you ask a question. Please explain why you are not inspecting what? So that's one of the other ways to potentially trade this. If we did, in fact, while we were waiting, and this would complicate it a little bit, but 123 days until September, to that time frame in September. If we bought the 122, could we sell weekly calls against it? And that's a great question. So let's see, 122, about 80. We'd probably be able to draw in maybe 30, 40 cents a week on the 5 contracts, and so that would be $150, $200 per week. We could also go both ways, where we would sell puts against the position up. We could sell naked puts, 2 or 3 naked puts against the position also. And so, explain quarterly options and why you are not inspecting. Oh, I don't know. Habit. I've always kind of ignored the, one, on this particular one, the quarterlies, oftentimes the quarterlies don't have quite as much volume. Quarterlies were kind of the gapper, the monthlies are the more standard type. So that's why I tend to look towards those. And plus, in this particular one, did I have a quarterly? Okay, yeah, I did here. Could certainly take a look at the quarterlies. What's the 122 quarterly would be? Yeah, it's so similar. 206 open interest compared to 2,800. It's not going to impact it that much, and so yeah, and that's a good bid-ask spread on it also. So either way would work out fine. And so anyway, I wanted to be able to show that to you. Again, that's a couple of ways to trade the gold, the typical tendency for gold to run in the from July through August slash September, September slash October, and it's a fairly inexpensive way to do it too, because I mean you don't have to buy, you don't have to buy 20 contracts. Just pick up, somebody can just pick up 5 or 2 or whatever, and the tendency is for that to take off and run. Let's just do one last thing and then we'll call it a day. So let's say, where's my upside target on gold, GLD? Let's just say my upside target. Let's say just get back to these highs at 129, and let's say it did that within a. You could do that within. Let's say it does that within 30 days. 129. So what would my? Okay. So I'm at 129. That's about $6.50. $6.50. And let's go forward a month. Which would be about there. And as you can see, if that happened, well, the 122s here, they would be worth $8.08. So, and the be worth $8 here on the monthlies. So that's what I'm talking about. We're expecting to get that move, and the faster it gets that move, a little bit of that move out of the way, the better. If it ran all the way, let's say all the way through, let's take it up through August. And price the same, 122. Through August, still be $7.27. On that, and on the quarterlies, it would be $7.34. So I hope you found that interesting, something to give you food for thought and preparing for the tendency of gold to run up during the from the June-July time frame. So with that, guys, I'm going to bid you adieu. I hope you have a great rest of the week, and I hope that helped. And again, I will send out. Matter of fact, if you will hold on just 1 second, I will try to just hold on just 1 second, and I will upload. I will actually, if I can, I will upload that. I think open shared item. No, I don't have it. Yeah, I have to email that to you guys. So just send me an email if you want to get the new TSI set up. So, okay, everybody, God bless. Have a great rest of the week. Aloha.